Navigating today's real estate market can be tricky. Want to buy or sell a house, finance or insure a house, or stuck with a house and don't know what to do? Florida Talk Real Estate has been your local one-stop real estate shop since 2012. Get the advice you need from your local real estate pros. Here are your hosts, Jim DePola and Johnny C. live on Real Radio.
Good to have you with us on a Saturday. Every Saturday you choose to spend 2 hours of infotainment with Florida Talk Real Estate. We thank you for now 10 years now. You're on 92.1, 101.7. Maybe you're listening on the free download, the iHeartRadio app. That makes us worldwide. Of course, you can also be checking us out on Facebook, Florida Talk Real Estate on Facebook. Thank you for joining us out the gates. And if you're on YouTube, thank you very much for finding us on YouTube as well. Florida Talk Real Estate LLC on YouTube. And that's right, 2 hours of infotainment on tap. And you're welcome to join us toll free at 877-927-6969. Jimothy will line you up. You got questions, comments, concerns in the world of real estate? Don't be shy. We got the team to handle all that and more. I'm your boy, Johnny C., your air traffic control. Let us say good morning to the mortgage guy from the mortgage firm, my friend Mike Rao. How are you?
Good morning. I'm doing great.
Nice
How are you?
to see you. Did you have a nice weekend last weekend?
I had the weekend off. Yes, we enjoyed it tremendously. I had family in town, and so they were still lingering by the weekend. So luckily Jimmy was able to accommodate the 1 day off. 1 day.
Well, it's very nice of him. Very nice of him. And I'm glad that you enjoyed your last Saturday. Let us also say good morning to, man, it's nice to have power players, and we got them all around on this Florida Talk Real Estate team. But when the name's on the sign, you're like, yeah, that's big dog right there. I'm talking about Paul Krasker with the law offices of Paul A. Krasker. He joins us on this Saturday morning. Good morning, Paul.
Good morning. Great to be here.
Nice to see you. Did you have a nice weekend last weekend?
I was in Los Angeles last weekend, and the weekend before that, I was in Napa Valley in San Francisco. So yeah, I had a great time.
So I think I'm going to opt for the Napa. I'm a Northern Cali guy, although I root like heck for the Dodgers. Between the two sides of the state, which did you enjoy the most?
Both were terrific. Actually, the middle, in between the weekends, I went to Santa Barbara and Montecito.
Oh, did you hit Monterey on your way up too, or?
We did, and
nice.
We stayed in the San Ysidro Ranch.
Oh.
Now, nobody needs to pitch for them. They do perfect job themselves, but that was a real highlight of the trip. Yeah.
Oh, fantastic. Well, I'm glad you had nice travels and great memories to pack away for a lifetime.
I stayed in the JFK honeymoon cottage.
Well, Lonnie, duh.
And the interesting thing is, it was a 2-bedroom cottage.
Huh.
You wonder who was in the other bedroom at some point during that weekend. Yeah.
Yeah. I wonder if that was an add-on after the fact, or if it was designed that way. We might have to dive back into that. We'll find out. That's a part of the infotainment that we talk about every Saturday.
That's right. You don't just learn about mortgage issues.
No. We learn about designs of all kinds of interesting things. Let's keep going here. Always a pleasure to say good morning to my guy, Jimmy D, Mr. Dependable. It's Jim DePola with Keller Williams Reserve Palm Beach. You know he runs a top producing Keller Williams team. Jimmy D, excuse me, how you be?
I'm doing good, Johnny. I'm doing good. Happy Saturday, everybody. It's a little bit rainy today, but I kind of actually am enjoying it. I don't know why, even though I'm going to be on the road as soon as we get off the show. I'll be driving around in this rain, but I kind of like it. Is it raining by all you guys?
No,
not right now.
For real?
If I look out one window, it's blue skies. I look out the other window, it's gray and threatening. So
that's so wild. It's been raining.
Typical Florida.
I drove from basically Palm Beach Gardens down here to West Palm, and the whole way it's been raining. It hasn't stopped raining since I've been at the office. So pretty wild.
Yeah, truly. I remember being a kid, my first real dose of, wow, this is not California. Because in California, as Paul just visited, even like typically, they don't get rain anymore. But if it's raining in LA, it's probably raining in San Francisco. I mean, it's just kind of the way it was. Northeast, man, if it's raining in your state, it's raining in the neighboring state. I remember standing on my mom or my grandparents' condo's front balcony at like 6 or 7. And it was raining right here on my left hand and not raining right here at my right. Like I found the line of where, and come to find out, very common in Florida.
Yeah.
Yes, very common.
Yeah, it's pretty wild. But anyway, everybody stay dry today. We got really good stuff to talk about today. I'm so glad once again we have Paul Krasker here from the law office of Paul and Krasker. We're going to talk about the student loan programs for the COVID and how silly they are, and talk about the way that you're supposed to do it the right way and save lots and lots of money instead of just delaying your payments and dig a deeper hole. We're going to go over that real quick. We're going to talk about missed mortgage payments in the forbearance plan. We actually had a customer that I met with yesterday that isn't sure what to do because they missed 14 months of payments, and now their mortgage company is asking for all the money up front right now. And they're coming after him, and they want the escrow money back and everything. And he's in a tight jam. I hope he'll call later today. He's supposed to call later today. We're going to be talking about that. Even if he doesn't, we have enough information that we can talk in detail with Paul about this, because this is the beginning, I think, of a little tiny glimpse of what the next year is going to be like for a lot of people who have missed mortgage payments. So we're going to have great information on that. We're going to talk about interest rates in the current real estate market with Mike Ralph from the mortgage firm. We're at near record low again for interest rates. People really haven't talked about that, but we're pretty close to almost a record low again. And we're a quarter point lower than we were just about 6 weeks ago. So we're going to talk about that a little bit. That's a little surprising, a whole quarter point. I didn't think there was a quarter point left to go down, but we did. And
I like that term you used there, Jim. Pretty close to almost a record. I like that.
Pretty close to almost.
Pretty close to almost.
It's almost pretty close to the record. Yeah, exactly. And then we are also going to talk about a couple other things if we have time. I'd like to talk about winning bidding wars for buyers, because it's so crazy right now. That'll be very quick. It'll just be 3 tips on how to win a bidding war. And also, I'd like to talk about this week if we can, which is cycles for real estate markets. Okay. So we just hit a record high of all time in Florida for the median sales price in South Florida of about $500,000 for the 3 main counties down here, right? Mm-hmm. $500,000 for a single family home, median sales price. When was the last time that we came close? Because we set the record. When was the last record for the high price? What year was the last record?
2006.
Mike's the math guy, right? Yeah. Mike's the math guy. So he didn't get trapped with all the price increases for all these years. The real high peak was 2006, and Mike is right. It took us 15 years, guys, to get from the peak, go down the slide, climb back up the mountain or up the stairs to get on the slide again. It took us 15 years from those cycles. The reason why I'm bringing this up, people, when they're making decisions about whether they should buy or sell right now, these are things they really need to consider, and they're not, because they're just not in the real estate market every day like we are. So we're going to talk a little bit about that also. I think that's kind of interesting. You don't hear this stuff anywhere else, guys. You're not reading it in the Post or the Sentinel. The local TV stations aren't talking about this stuff the way that we talk about it. We talk about it for real, not trying to sell you one way or another what to do. We're trying to give you answers so you can navigate your way, the way you and your family need in your real estate needs for your market and your family.
That's right.
Okay. So let me see. We had so many shout outs, and you know what? I'm not going to do the shout outs today because, to be honest with you, Johnny, you know how busy I was the last couple of days. I do hardly have time to do anything, so I don't have the shout outs lined up, so I'm going to pass.
Well, Mike, why don't we get shout outs lined up for the future? Be a future shout out by going to floridatalkrealestate.com if you're looking to buy or sell, or if you get any other issues in between, whether you're missing payments, mortgage payments, buried in student loan debt, you need a refi. I mean, the team is here for you. We are the one-stop real estate shop. Go to floridatalkrealestate.com. That's your access to the entire team. Be a future shout out.
Hey, speaking of future shout outs, I did promise. I was talking to one guy yesterday who said, "Hey, you guys going to be live tomorrow?" I said, "We are." So shout out to Frank. Jim, he's a seller buyer, but the buy side happens to be a for sale by owner, because they were already connected with the seller of that property. But they got their home listed and under contract, right? And so he's going to be a future shout out. But say hi to Frank, who's probably a
Frank?
regular listener and listening right now.
Cheers.
Thanks, Frank. Thanks for using the team. We've been doing a lot of work team-wise because this is the kind of market where you got to have a whole team of people working on your real estate transaction, the insurance company, the title company, the real estate agents involved, and of course the mortgage and the loan officers. They all have to work together right now. It's been so crazy. That's one of the tips, little hint on the 3 ways to win a bidding war. There's a hint in there about what we're going to talk about with that. The other thing I wanted to say is lately what we've been doing a lot of is we've been getting a lot of people lined up to sell their house, and then they're buying somewhere out of the area, either in another part of the state of Florida, from where we cover everything from Vero Beach down to Dade County. But other people are moving. Let's say, like I had a couple right now, they don't know really where they want to live. They want to live in the roughly Claremont, Mineola area of Florida. And I got to be honest with you, I never heard of Mineola before. I only know of Mineola, New York. I don't know of Mineola, Florida. I've never heard of Mineola, Florida. So I was learning a little bit about that, but we had a person there. We have another person, Marshall, who's selling a home in Port St. Lucie with us, and he's going to be buying in North Carolina, right? We've had other people looking at Georgia, South Carolina, New York, Illinois, Wyoming, through a connection through the Rao family, and many other states we've worked in the past, Oregon, Arizona, California. Now, the reason why I mentioned all these states is what we do that makes us different than most real estate teams is when you want to make that move where you're selling the house here and you're trying to buy something somewhere else, we can place you with a top real estate agent in the area to help you get through what you need out there. And especially if you're a seller buyer, right, where you have to do a simultaneous close and you're a seller buyer. And I say that fast because you need the money from the sale of the house to buy the new home. And if you don't make that happen in the right time, you become homeless. You might have money in your pocket, but you have no place to live. We don't want that. So working with a team like us, even if you're moving out of state or out of area, we can help try to make a smooth transition from the sale of your home down here with us to the purchase of your home in another state. Now, Marshall right now is in every part of the market. That's why I think I know a little bit more than most realtors about other parts of the country and the market, is because we're dealing with those agents all over the country talking about stuff that's going on in the market up there. So, Paul, I wanted to mention this to you. I haven't had this happen down here, but now I want to talk to you because it might be a new tool in my toolbox, but it sounds kind of scary to me for buyers. They're doing a thing up there. Instead of doing escrow deposits, they're doing what's called a due diligence deposit, which means that you're waiving that deposit. It does not go to the escrow title company. It does not go to the escrow holder. It goes immediately to the seller when you go in a contract, and that's a fee for taking the house off the market. And they're calling it a due diligence fee. So the sellers are like, why am I going to take my house off the market if you're not going to give me some money right now, whether you close or not? So even if you don't close, that due diligence money is gone. And I was like, wow, I haven't seen that down here in Florida. I haven't had an offer structured that way and presented to me. And I also haven't asked as a listing agent. So now I'm wondering if I should be asking for that. Do you see much of that right now?
I don't see any of that right now.
That's what I thought.
Yeah.
Okay. What do you think about that? Nothing wrong with it, really, if both sides agree.
There's nothing illegal about it. It's
Right.
just a question of whether you're going to put your property at a disadvantage as to others that aren't going to charge a due diligence fee. You know,
Especially down here, right?
if it's $1,500, is the $1,500 really worth it to your seller to make sure that people are serious? You know, there are a lot of people down here who say, hey, you know, I'm concerned about mold. I'm concerned about structural integrity. I'm concerned about water leaks and whether the windows are, you know, hurricane rated or not. And until I have answers to that, I'm not going to put any hard money down.
Yeah, Mike?
Or as little as possible.
Right. So if
Yeah.
you're asking for $1,000 and it's just a cost of going forward, think about it. When you hire an inspector, and you hire a mold inspector and you hire, a structural engineer to look at a couple of things that you're concerned about, you're paying $1,500 there anyway. So if it's another $1,500 in the seller's pocket and it gets you the deal as opposed to somebody else, maybe you pull the trigger.
Yeah, I mean, the way I think about it, Jim, if you have people who are operating on the level, like on the up and up, maybe that's just what the market dictates. But holy cow, it seems rife for. I would hate to be the lender, and I would hate to be the real estate agent on the buy side, because that seller could be looking for any little misstep. Like, you missed the date, you missed the deadline, you didn't perform for the letter of the contract. Wow. They just get out and keep your money. You have any idea how much that money is? Is it 1,500 like Paul's thinking? Or
I know Johnny wants to say something, but just hold on here, Johnny. Did we lost somebody? Okay. I think we lost the production crew. We didn't. I thought we lost Jimothy for a second, but we didn't. Jimothy, we're live, right?
Yep, we're good.
Okay, I'm sorry. We lost the production crew. So what happened was I'm sorry, Johnny, I know you wanted to say something, but some of these people, what the agent up there is telling me, and they're a very seasoned, reputable agent at Keller Williams, they're telling me $10,000, $15,000 due diligence, right, on a $300,000 house.
Oh, that's ridiculous.
Yeah, that's what I thought.
Those numbers don't work for anybody.
Yeah.
And especially if they find a problem during due diligence and they say, you're just taking my money to try to fix your house.
Yep.
Now, if it's down here and Jim, you're talking about coming up with a unique way of beating out other offers, that certainly sounds like a unique way to offer them. I'm going to give you $1,000 up front in your pocket, not in escrow, and then I'll put a 10% deposit down once I get through due diligence. That's a unique offer. Nobody else is doing that. So it might not be that the seller wants to ask that. It might be that the buyer wants to offer that.
Shh. Quiet, Paul. I'm going to put that in my toolbox and slip it in. Nobody hears that.
Nobody else gets to do that.
La, 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 la. It is a good idea, Paul. That's why I thought it would be interesting to talk about it. Johnny, what were you going to say? I'm sorry.
So I know, like, regionally, I know, Jim, you've talked for 10 years that, real estate is neighborhood to neighborhood, but we're going to go state to state really here. Pitfalls are very different based on the state. Even in talking with you about North Carolina, insurance isn't a concern for them. Like, when they're looking for a home, they're like, oh, we need to make sure that the insurance is going to push them over on that. They're like, what? We're not worried about that at all. Like, that's not, what are you guys worried about? Insurance? Yeah. So the pitfalls are very different. Is that a new pitfall kind of, I guess pitfall for buyers in that state? Or has that been around a little while?
I've never heard of that. Maybe like in New York and San Francisco and Los Angeles. I don't know. I've never heard of it before, to be honest with you.
Yeah. It's new to me, but money always talks, right? I mean, it's just kind of the way it is. So if you can, I know if I was going to have to put $10,000 down, though, I'm having somebody like Paul absolutely scour over a fine-tooth comb a contract so I can make sure, like Mike said, you want to make sure you don't have some super savvy seller just waiting for you to miss some silly deadline, and there goes 10 grand.
Yeah, but it's not even the silly deadlines, because we can always insert a notice and opportunity to cure clause that requires the seller to give you notice and 5 days opportunity to cure, so that you don't get hit by some sort of technicality. The reality is it's the real items. It's the big issues that I'd be concerned with if I'm dropping $10,000 down. If you drop $10,000 down and then you find out it needs a new roof for $25,000, that new roof just cost you $35,000 because you want to go forward to try to save your 10.
Right.
You would have tried to negotiate with the seller to try to get some sort of a discount against the purchase price because of the roof, but the seller sits back and says, hey, do me a favor and walk away.
Is this due diligence fee? Is this clear to them regardless of the outcome?
Oh yeah, when I was talking to the agent up there,
it does sound that way.
Yeah, and the agent is so common up there right now, Johnny. When I asked her to educate me on that, she was actually surprised I didn't know about it.
Interesting.
Right? That's how common it is up there right now.
Yeah, so clearly Mike and Paul were following along that's just money in the seller's pocket regardless. For me, I'm thinking like as long as the process goes through and you end up buying the house, like that counts as proceeds towards the sale. But no, that's not the way. I'm not hearing it right. That's their
I'm not
money.
sure. I'm not sure. The way I didn't ask that question. It's a good, and it's funny that there was an assumption that it wasn't part of the sale. I had the assumption, but didn't ask that if you put the $10,000 down, you're buying a $300,000 house. As long as you close, that 10,000 counts towards the 300,000. Okay, but if you walk away from the deal for any reason whatsoever, you're going to. They already got the 10,000 because you gave it to them directly. Now there might be another escrow deposit on top of it that's held in limbo, but you're going to lose that due diligence money no matter what.
Yeah, if the proceeds end up going towards the sale, the purchase in the long run, that's a better place to be. Like Paul said, that's a pretty good offer to make somebody as long as you're really confident that you're going to be buying that home.
Yeah, and there's a couple of houses what we're working on right now where we're more worried about an appraisal than the inspection. So we're doing the appraisal first just to knock it out and make sure that it's all okay before we move forward. And those houses like where you're not really worried about the inspection, there always could be a surprise that you have to get an inspection, but some houses you look at, you're not really too worried about anything. Those would be, I think, a safer bet. Now, this is a strategy we ended up using to help the North Carolina guy get his house, Marshall. So he was looking at all these properties last weekend. He was up there with the realtor. And one of the properties he was there were 3 other people that came in while he was looking at the property. And the realtor had already mentioned that there were already 10 offers or 15 offers on the property, plus all these new people coming in. So Marshall turned to his agent and goes, I don't want to negotiate with 15 other offers. I just don't want to do it. Okay. Now, that's a pretty tough thing to say because it limits your opportunities in a market like this because there's anything out there, right? So, but we did, we're creative, and this agent thinks the way that I think. So what she did was she went back to look for stale listings. So she went and looked at listings that were on the market 50 days, 60 days, or longer, right? And then they found a nice house that he liked that was 60 days on market. And it had already gone into contract and fell out. Didn't seem like it was a house problem. It was more of a buyer problem. So he put an offer on it yesterday. We're waiting to see if he's going to get it. But with that house, he's not putting down a due diligence. He's offering a traditional escrow deposit because his attitude is, why am I paying you not to keep the house off to take the house off the market when it's been sitting here for 60 days? If it's been on the market one day and you're trying to take off the market, that's a little maybe different. So anyway, we'll see what happens with Marshall and that due diligence clause. I hope it doesn't rear its ugly head down here because that just sounds like lawsuit heaven. Paul will like it. But
Paul's like, let's start, guys. I like that clause that you mentioned, Paul. Is that something you could insert into your standard as is contract? Where basically, I know there's basically 3 days is the standard for like inspection, right, or loan commitment. If you didn't say that the loan approval, for example, if you didn't provide it, the loan approval in time, the contingency is waived as either party cancels, right, or the sellers cancel within 3 days or something. But you say that you could have that date in there. You could also insert on top of that hey, we forgot or we missed the deadline, but you need to notify us and give us some time to remedy that or to cure it.
Yeah, and on the very high end properties, you're able to negotiate clauses in there for reasonableness standard, and people understand that this is like buying an office building. It's a really at that level of commercial transaction. On the traditional residential real estate that you're doing every day, especially in a seller's market, it's tough to add things in. They just go to the next offer.
Mm-hmm. That is so common right now. There's a lot of times where a lot of people are not even doing the counters anymore.
Yeah.
Because there's just too many offers on the table. We put 2 houses on the market last Thursday, a week ago yesterday. This is not bragging. I'm talking about the market because we've always been ahead of the curve as far as days on market and list price to sold price. We've always beat the regional averages for that.
Because of your systems, though, Jim. That's that's not luck. That's the systems that have been built in
that's
over
our
the years.
proven systems. Yep, but right now, the days on market are not really a major factor. When we first started out with Paul Krasker and everything was a short sale, days on market, it was 90 days, 100 days, 180 days on market, right? But me and my team during that time, our sales were doing 30 to 45 days, which was super fast back then for short sales, because we had proven systems on how to handle a short sale and make our short sales more attractive than other people's short sales, right? So, but this whole thing about, I'm sorry, I'm getting off track here. I went off track because I started talking about the short sales.
Days on market.
Yeah,
your listings are selling.
We put 2 houses on the market last week. One only for 210. Now the highest sale in the neighborhood was 198. We put it at 210. And the second house we put on the market at 450, which was also at the upper limit for that neighborhood. The 210 had 38 showings from Friday morning until Monday morning. And we had 17 offers. Okay. And wow. 38. And then the other house didn't show.
Is that a condo, Jim, or a townhome?
It was a townhome. Lee's house. It was Lee's house. Yeah, Lee's buying a house with us. So we put his house under contract. We put it above 10,000 above list price. And we have it where the buyer has already agreed to pay 10,000 above appraised value. If the house doesn't appraise, they're already going to pay us 10,000 above appraised value up to the contracted price.
Is that one of your strategies? Are we on that segment yet? Or are we talking
No, we're not on that segment yet, but that was one of them. And then
I have a story there.
Recently. But the 450 house, we didn't get the 38 showings. We only had like 10 showings, but we did have 4 offers, and we took 15,000 above that price, that list price, with also 20,000 above appraised value if the house doesn't appraise. Oh. So so this market is like that right now, and I wish the market was a little more evened out, because I really feel like it's so hard to say we're not in a bubble right now. And I've been saying we're not in a bubble, but it's hard to say that right now because the prices are really, even with the low interest rates, the affordability issues are chronic right now, so we have to keep an eye on that.
You mentioned earlier describing 2006, climbing the mountain to the slide, right? To get on the slide. You think we're actually headed to a slide right now?
I think that I think we're at a peak. I think if you were looking at like Mount Everest, you know how you have the snow caps at the top of the mountain?
Yeah.
The snow cappy area. That's white at the top. That's kind of where we are. I don't know if we're out the upside. I don't know if I'm on the left side of the peak or the right side of the peak, but we're right up there in the white cap part. Okay.
I like that. So we're gonna slide a little bit as we're on the snow, and then we hit the jagged rocks and we just fall. Right?
Yeah, and it's that first slip's like kind of scary. You're like, whoa, almost bust my ass right there. Whoa, I better pay attention.
But they haven't paved the side of the mountain with the what do you call it, the slip and slide yet, right? They haven't installed they did in 2008.
Yeah, that's not a quick way down. Yeah.
So I really think that we're at a peak. Can it go up a little higher? Yeah. And it's very hard to predict right now. So even the Swami doesn't like predicting right now, because we're rocking around down at the lower interest rates, right? We've been knocking around now for many, many months. The unemployment and the employment situation is also going up and down, up and down, up and down. I mean, we had a good report this Thursday. We had almost 1 million jobs created or filled. Our unemployment rate supposedly went down 0.5%. You could believe that, not believe that. But the bottom line is it isn't all bad and it's not all good either. It's just kind of knocking around in the middle.
Yeah, inflation's sucking for a lot of people.
Yeah, it is. But, gas prices have been going down. Lumber's been going down.
Yeah, no. So at least the gas isn't totally killing us. Like I expected paying more at the pump this year. I really did. I had it in my head. I was pretty well settled to pay for a little bit more. It's not to try to pretend like I'm thrilled when I leave the gas pump, but I did expect to pay a little bit more. So yeah, there are positive signs, and like interest rates still almost record low, and that's if you're a buyer, man, it doesn't get much better trying to get money. Money's pretty inexpensive right now. So we got access to the entire team, y'all. Pros, experts in their field. These are professionals that are in the grind every day. Man, if there's a situation, and we know every situation is like a snowflake, they're all different. But if there's one that they're not familiar with, the good news is they're not scared to dig in and learn on the fly to make sure you get the best outcome for whatever you got going on. Go to floridatalkrealestate.com, your one-stop real estate shop. You'll find the hotline there, 888-973-7828. Try it out. 24 hours a day, 7 days a week, answered by a live body. Don't believe me? Call to see if you can get connected to go see if you want to get an appointment for go find a house or get connected to Mike. Call it like 3 a.m. Say, hey, I want to talk to Paul. I want to get with Paul's team to look into student loan debt. What's going on with the moratorium? I need information. I need to call at 3:30 in the morning. If you don't believe me, answered by a live body. Boom. We'll get the message. We're connecting you to Paul. And of course, that's craskerlaw.com, but floridatalkrealestate.com. And you find us on Facebook. You find us on YouTube. And thank you for being with us on this Saturday. Jim, you mentioned Lee. And then boom, like a bad sign, Lee jumps on the phones here.
Okay, cool. But right before, I think Paul wanted to say something real quick. Paul, did you have something to say?
No. Let's take Lee.
Okay, I'm sorry. Let's take Lee's call. Then we're going to take a break. Right after the break, we're going to get into the student loan payments and the mortgage forbearance stuff. So please, you got to call for that. Let's put Lee on the phone. I
can't assume that it's the same Lee, but you said the name Lee, and then we get a Lee on the phone. Okay. So I just piece it together in my head. Lee's like, oh, maybe they're talking about me. 877-927-6969. It's the number he dialed. Jimothy picked it up. I'm sure he was pleasant. Let's say good morning. He's on the air. Good morning to you, Lee. Welcome. You're on Florida Talk Real Estate. How are you?
Good. Hey, good morning, guys. Thanks, Jim. It is the Lee from the townhouse.
There's our guy.
Lee. Yep. So Lee is thank you.
But it is Lee.
Yeah, thank you so much, Lee. Lee is wasn't expecting a phone call, but really glad you called. Lee's selling a house with us right now. He's looking to buy a new home. He's been doing the financing through Mike. We're going through a lot of stuff because he wants to fix her upper, so we have to deal with insurance issues and will the house qualify for a loan issue? And we're going through that right now. So Lee, thank you for calling in. So Lee is one of my favorite customers for this story. Okay. Guess what he did this weekend when he had 38 showings? He moved to a hotel.
I'm out of here.
Is that true, Lee? Is that what you did?
Yeah, I checked into the beach resort in Delray and spent the weekend there.
Great
Lee,
decision.
did you get the Kennedy suite?
Unfortunately, no. I wasn't able to afford that one, but I had a good weekend, poolside, beachside, drinks. Just kind of went to a couple of restaurants there on the water, and I just decided if that many showings and the appointments were set up so close together, I'm like, in and out wasn't going to work for me, so I just left.
Great decision.
I
probably would have done the same.
Kick it back, have a cocktails going, I'm making money right now. People are coming in. I'm going to get above asking price. I'm going to have multiple offers. It's nice. It's a nice life to be a seller right now.
Yeah, it definitely was. And, there's no second guessing. You there's always the what ifs, but, you make your decisions, you're happy with them, and you move forward.
That's
so
right.
Now, and looking at a couple of properties and trying to, the stress, it's like one stress is over with the selling, now the stress begins trying to find.
That's what I was going to say. So all that fun stuff on the sell side, the buy side, not so much. The buy side's a little frustrating, although I need to call you off air. I do have a 12 o'clock appointment, so I'm going to try to call you on the way over there. I need to talk to you because Mike gave me some financial information about that house we were looking at. And I also talked to the agent very briefly yesterday, by the way, who has COVID. We had 3 agents in our office that had COVID for sure. One of them I know is hospitalized. And so just be careful out there, guys. It's just really, really crazy. So
COVID everywhere.
Yeah, but the agent that we're dealing with, she wasn't returning my phone call. I got a little snappy with her, I guess. And then she explained to me that she had COVID and she could barely function right now. And then, of course, I felt like a little tiny thing.
Well,
I apologize profusely. And then I did offer, I said, anything I could do to help you. I'm not trying to take any of your commission or anything, but anything I do to help you, let me know.
oh,
You
you're a
know,
sweetheart.
it's just really bad right now. So Lee, so you were a typical seller buyer. You're not a typical seller buyer. That Lee is lucky in the fact that he doesn't have to sell the home and buy the home immediately because he does have a transition property if he wants to. So he's not under the same pressure that some other people are. But it's still a lot of pressure. And the thing is that you really don't want to move twice, right? So you don't want to move out of your house, put stuff in storage or somewhere else, and then find a house and then move again. And you would prefer not to rent, right, Lee? You want to buy as opposed to renting.
Oh, absolutely. Yeah,
Right.
Renting is okay if you absolutely have to, but in my world, it's you're pissing money away.
Absolutely. So we're going to be working really hard trying to get Lee his property. We found one that checks off most of the things that he wants on his property. However, the house is not in great condition. So we've been struggling with that. We don't know how old the roof is, but we know it's older. There's this huge tiki structure in the backyard with this very nice backyard pool spa area. But it's connected to the house and it's kind of rotted in certain places. And there's some water damage on the house. And we're trying to figure out how to go through all that and try to get the sellers to work with us. The other question I have on that, Paul, is that it's a probate case. If you were a real estate agent and you were the buyer's agent and you didn't want to get stuck into a contract because the probate wasn't done properly, what kind of questions would you ask the listing agent if you were the buyer's agent to say, what have you done through the probate process? And are we going to get jammed up where we're not going to be able to close for a long time because probate wasn't done correctly?
Yeah. The first question I'd ask is, was this the homestead of the decedent? If it is, then the house passes to the spouse or minor children, and if no minor children, then the children. Outside of the normal probate process, and you wouldn't have to wait for the creditor period to run. But if it's not a homestead, it was just an investment property or a second home, then you're going to have to wait for a creditor period to run. And if it's not a probate attorney who's on top of his stuff, then you can have a problem with a substantial delay. The probate creditor period runs for 90 days from the date after the letters are issued and after you publish your creditor period.
Yeah. So you'd have to wait 90 days for that. And then if you had, after that 90-day period, even if, let's say, you got lucky and there were no creditors that popped up out of the woodwork, how much longer in the process do you normally take on average? Because I know every case is a little different.
Oh, and the next day after the creditor period expires.
Mm-hmm.
Yeah, that's
Hey,
I'm thinking,
Lee,
Paul, is there a oh, I'm sorry, Jim. I was gonna personal representative came to my mind as a question.
What do you mean?
In the probate, don't you have to have a PR assigned at some point to make the decision?
So that's a trick question. If it's a summary administration, you don't have to have a probate, a personal representative. You could just do a summary administration, have all the heirs sign off at one time, and literally get the distribution the next day. But that's only for properties that are under $75,000 in value or where the decedent has passed more than 2 years ago. On a formal administration, then you do have to have a personal representative.
Okay. Hey, Lee, thank you so much for calling. Is there anything else you want to talk about? Because we got 2 other callers here and I don't want to miss out on them. Are you still around?
Yeah, I'm good. Just
Lee,
yeah.
Okay. Thank you so much. I'm going to call you right after the show so we could talk about that house, okay?
Sounds good. Take care.
Awesome, man. Thank you so
Hey,
much.
Lee, thanks for being out there. Thanks for tuning in, my friend. And of course, thank you for putting your trust into the team Florida Talk Real Estate. That's it .com, floridatalkrealestate.com. We got Keith and Terry on hold. Who do you want to go to next, Jimmy D?
Let's do Keith and then Terry, please, if you can hold. We're going to take you. We're going to do Keith, take the break. Maybe we're not going to take the break. Maybe we'll take the break at 10. Let's do Keith. Terry, hold tight. We're going to see what's going to happen because Terry has the missed mortgage payment question, which is really important for this show.
Perfect.
So I really want to get Terry, but we don't know what Keith's going to ask, so let's do Keith first. Okay?
Hello, Keith. Thanks for your patience, my friend. He's joining us at 877-927-6969. Good morning. You're on Florida Talk Real Estate. How are you, Keith?
I'm doing good. Good morning, guys. How are you, man?
Good.
Hey, good morning. Thank you for calling.
Is this my buddy, Keith?
Yeah, today is me, man. And hey, Mike.
Oh, nice. School year starting up. I hope you and your beautiful daughter are ready, my friend.
Yeah, we're ready, bro. Tuesday, we're starting, man.
Here we go.
Yeah, shout out. Hey, Keith, how are you, man? Good to hear from you.
I'm doing good, Mike. How are you?
Good. Good.
Yeah, I got a letter in the mail yesterday, which was not very I wasn't in the mood for it, but I just opened it anyway. My home insurance, Gulfstream Insurance, just sent me a letter telling me that they're canceling my policy because they're liquidating their company. And I'm like, oh Jesus, this is all I need right now. How is this going to affect me, man, in trying to find insurance right now?
Okay, so Mike, do you want to say? Because I saw you ready to say something. I'm sorry.
I was just going to say the very first thing that I would be doing is getting in touch with Ross and saying, hey, Ross, I'm getting canceled. And you may have gone with Ross in the first place when you bought the home, but he's who I would be reaching out to and say, what are my options? Because there's going to be some kind of option for you. It's not that you can't get insurance. It's just your current insurance. You're one of the ones getting hit with the non-renewal.
Yeah, so Keith, this is happening all over the state right now, but specifically in the Tri-County area pretty hard. And we've been talking about it for months and months. It's a very big issue. The worst case scenario is going to probably be is that you're going to end up going to Citizens Insurance, which is the government-backed insurance. That's what a lot of people are going to right now. Do you know how old your roof is?
That's the problem. No, my house, when I purchased the house, there was not a permit on the house, but they did certify that the roof was done. But I don't know how old the roof is. They estimated somewhere probably around 10 years.
Okay, well, if it's only 10 years, you're in pretty good shape. Unless it's damaged or something, I wouldn't worry about that too much because that's been a big issue for people. But
2005.
I'm sorry?
2005.
Okay. Oh, so that was 16 years. So he's getting up there, but it's not there yet, probably. What you're going to have for the insurance is a notice saying that the roof has at least 3 years life expectancy on it. If they start asking questions, that's what you're going to need is a 3-year life expectancy. So if you don't have that, they are going to say we're not going to cover you, or we're going to cover you but not cover the roof. Or we're going to cover you and charge you a lot of money until you put the roof on.
Yeah, and I think, Keith, it sounds like you shouldn't be taking this personally. It sounds like that particular insurance provider is liquidating their position or basically stopping or hedging their position. And so you're caught in their machinations, but you should have other options. The reason I pulled that number because I know Keith, and so I had his inspections when he bought the home in 2018.
Yeah,
he worked with Scott on this purchase. But,
yes, I did.
So
and I did sit down and talk to you, Jim, too. So it was cool.
Yes, I remember, Keith. So we're going to get you through this. We'll find out. Your house is going to be insurable. Don't think that it was your house, like Mike was saying. There are a lot of companies that are dumping people in South Florida right now. A lot. Okay, so this is a very common experience people are going through. We'll get you through it. No big deal. Ross will give you the best quote he can. There's no, Ross doesn't have any problem if you shop it around to try to get the best deal, especially today. But the bottom line is almost everybody's going to Citizens anyway.
Well, they were the insurer of last choice, and now they're kind of the insurer of first choice.
Yeah. Only choice.
Or only choice.
That's it, like only choice. Yeah, maybe not first, but only.
That also means, hey, on the bright side, that also means it's the best choice.
True.
Yeah, exactly.
Silver
Right.
lining.
Exactly. And at least it makes it easy. It makes it an easy choice, right? Hey, Keith, thank you so much for calling. I'm going to put Johnny, make sure you put a note in FUB that we need to reach out to him, get him over to Ross.
I sure will. Yes.
Okay. Keith, thank you so much. I want to roll right into Terry because he's been waiting a while. So, Paul, we're going to take this 15 minutes and do the foreclosure stuff first. Okay. And then we're going to go into the student loan, but that's going to be very quick. But we're going to talk about student loan today, too, because I think it's important. Can we get Terry on the line? Is he still there?
We sure can. 877-927-6969. That's the toll-free way to join the program every Saturday. Really, that's the Real Radio number connection. If you're a Real Radio fan, it should be absolutely embedded in your head. It's 877-927-6969. Terry's joining us. Hey there, Terry. Thanks for your patience. Welcome. You're on Florida Talk Real Estate. How are you?
Yeah. Hello, guys. How you guys doing?
Hey, Terry.
I'm doing good, Terry. Thank you so much for inviting me to meet with you yesterday. I really appreciate it.
Yeah, I want to make sure, I'm clear and everybody hears me. The experience was 100% professional. There was no, I would do business with you. I just felt very comfortable, and I appreciate the just how you explained everything, and it's just, I could explain, I could understand it, and I really appreciate it. And thank you very much for the experience and the knowledge. And I know we could do business. It just isn't, it's still, we still have other things to look at. But my dad would have rolled over in his grave for two reasons. Number one, how much money we could have gotten out of the house, and number two, and turned it down, and or wasn't the best situation. And number two, the guy who makes his living off of making doing business like that turns around and says, "Listen, this isn't the best thing for you. The best thing for you is to be where you're at, instead of you trying to talk me into getting that money." And I appreciate that. Thank you very much.
Well, that's what we do. We're here to help you with to give, and we were just saying this before you called earlier. We wasn't sure you were going to call today, but we're here to help you to get the answers that your family needs to work for you. If it ends up selling a house or buying a house and I can make money off of that by assisting you, I'm there for you. But I'm also there kind of looking as myself as a consultant and trying to put myself in your shoes and say, what would I tell my mom or my dad or my sister if they were in the same boat? How would I give them the advice? And I try to do that, even though it might not benefit me financially. Okay, that's just what we do.
I believe that. I totally believe it. I've experienced it, and you're a man of your word.
Well, thank you. So let's see if we can get some help from Paul or some advice from Paul for you, because this is a good one, Paul. Okay, this is going to bring you back in time a little bit in a way. Okay, except they're not upside down. So Terry and his wife live in a nice home. It has some deferred maintenance, some upkeep stuff. But overall, the home is structurally sound and very good condition and everything. But and we went over the comps, and I told him what he could net in his pocket if he were to sell it, and I gave him a range. I'm not going to go over real numbers with you, Terry, because I don't want to get into that on the show. But it was low six figures he would make, okay, which is a decent amount of money, especially compared to the price of the home. But here is the catch: if he sold it, even if he got that decent amount of money, his new house that he would buy, most probably, if he were to do it, or if he were to sell the house and then become a renter, the rent would probably be almost double what he's paying in his mortgage payment right now.
Okay.
And he really can't. When I sat down to talk to him, I really didn't feel comfortable that doubling his rent payment, cashing out the amount of money he was going to make, and then doubling his mortgage payment to pay for rent, if you will. I know that sounds confusing, but imagine that what his mortgage payment is. He sells it, he makes a big profit off the house, but now he's paying double for rent what he was paying on the mortgage.
Right.
And I felt like what he was going to get for that double rent wasn't going to be as nice as where he lived now. Okay. So I felt like he was a perfect example that while he could get the equity, he might be a better fit to stay in the house. and eventually get a refi through Mike to do some stuff in the house and fix it up. That's what I thought might be best for them.
And they want to stay in the house.
Well, they weren't sure at first, but when I went over everything, when they saw the amount of profit they were making, while it was very healthy, it wasn't life-changing profit, that it was just a slam dunk that he was going to be able to sell the house and buy something and keep the mortgage payment where it's at. Do you understand what I'm saying? Even if he took all the money from the house and he were to buy a new house by himself, he might not have enough, his mortgage payment would still be higher. But now, Paul, here's the situation. Would you mind if I said the name of the company on the show, or would you prefer not to, Terrence? It's up to you.
No, I don't mind. I don't mind, Jim. Whatever we talked about yesterday, it doesn't matter what it is. I don't mind you.
Okay, I just didn't want it. So he's working with the. I'm not going to say the real name because everybody laughs when I said this. He works with the Scud Missile Company. So you guys think about that, the Scud Missile Company.
That's right.
Okay?
Yeah. Is that the lender? Are they out of Iraq?
Yeah, they might as well be. We might as well be, especially right now with what's happening over there in Afghanistan and Iraq.
We're pretty certain.
So here's the thing. When COVID hit, he did apply for the CARES Act, which gave him the ability to miss the mortgage payments, and he's gone through the expiration period. So he showed me an invoice from the bank where they're demanding that he make back all 14 months payments plus the escrow money that they spent for Terrence's house, because there was an insurance policy due during that 14 months and he couldn't pay it.
Yep.
So they paid it out of their pocket, and then they want the 14 months on top of it. Now, I didn't see that there were any penalties or late payments in that statement. So the CARES Act, when people applied for it, this is what they were told. Does anybody remember what they were told when the CARES Act came? Do you remember?
I don't.
Okay,
I mean, I think the premise was that you were gonna, not have to make your mortgage payment. I mean,
Yeah, but then no late fees.
no late. Yeah, sure. Yeah.
And not reported to the credit bureau as a late payment.
There you go.
And they were said that what they said at the time was they were going to take all the missed payments and put it on the back end of the loan and let you just start making your payments. But the COVID Act took so long, and many of the people missed more than a year of payments. The escrow became a big issue because then taxes and insurance had to be paid, but the owners weren't paying towards that through the year, and then the bank had to cough up the money. So now Scud Missile Company is asking him to pay all 14 months plus the escrow right now. They want him to pay right now. In fact, according to the statement I got, he was supposed to pay it 6 days ago.
Huh.
Now, if he had that, he wouldn't have been in the CARES Act in the first place. So, Paul, what I told him is I'm not an attorney, I'm just a realtor.
But I know a good one.
I said, but the first thing I would do is call up the Scud Missile Company and say, hey, I was part of the CARES Act. Why aren't you taking these payments and throwing them on the back end of the loan? Why are you asking me for all the money up front? I don't understand. Tell me why that's happening. Then once he got that information, if they didn't resolve it in his favor, then I was going to tell him that's when you got to go call craskerlaw.com, law office of Paul A. Crasker, to find out what's going on. Paul, did I give bad advice, or do you have other stuff you can give for insight into that?
Well, I think you want to ask a few more questions. Terry, has your income been substantially impacted by COVID?
Yes.
And you can document a significant double-digit reduction in your income over the last 18 months?
Most definitely.
Okay. And did you sign paperwork at the time that you entered the forbearance?
I don't remember if we signed anything.
Most people were just accepted into the program over the telephone, but some lenders asked you to sign paperwork. If they did, I'd want to see a copy of that paperwork.
There was an email that we did have to answer some questions on. I don't know if there was an electric signature or anything like that. I would have to find that out.
Yeah, I'd try to go back and find that information. And then the last question I'd want to know is, was this a Fannie Mae, Freddie Mac, FHA?
No.
Okay.
No.
Wait, are you sure? I'm not sure you know that, Terry, and
More
I'm
in
not
that
trying to be
paperwork.
jerky here. 70% of the loans are either Freddie Mac, Fannie Mae, FHA, VA. What's the other one, Mike? USDA. 70% of them are basically those 5 loans. You don't think you have a government-backed loan?
And Terry, just to let you know, they could process it themselves and then transfer it to Fannie Mae, Freddie Mac post closing.
Didn't know. Oh yeah, that's true. Yeah. So you need to find
the
out.
real question. I'm sorry to interrupt, guys. The real question, Terry, when you bought the home, did you have to do some sort of?
It is an FHA. Sorry.
Okay.
It's an FHA loan.
Okay. All right.
Okay. I think that could be good for you because FHA is going to demand that their lenders treat their borrowers in a certain way.
Mm-hmm.
The interesting thing, and I say interesting not to you, not to or for you in any way, because you're stuck on the front lines of this thing, is we just don't know how all the lenders are going to react yet. And people like yourself on the front lines are getting the first letters and hearing that it's not being thrown in the back end like all the politicians talked about, and like all the central bankers talked about, and the FHA and all these others.
I thought of one additional question, Paul, which was, Terry, what was your status on payments before entering the mortgage forbearance with the CARES Act? So were you current back in, say, January, February of 2020?
Yeah, yes, we were current.
Okay.
Yeah, because if you were in default going into the CARES Act, that's a different positioning, right, Mike? Right, Paul?
Yeah, that's yep.
Sure.
Yep.
Right.
Paul?
So I think Jim gave you good advice. I think I would call up the lender. I would remind them that this is an FHA loan and that you were told, and everything that you read online says that the FHA loans will be put on the back end, and you don't know why you're being treated this way. And, say, I don't want to hire a lawyer, but if this is your final position, you leave me no choice.
Okay.
Paul, you were talking about wanting to see any paperwork that maybe he signed or e-signed or something, and that's going to be for the ability to see if he did sign away. Like, oh yeah, I'll catch right up as soon as I mean, there's a chance that predatory aspect exists out there.
Yeah, there's a chance that they said we'll throw the payments on the back end as long as we don't have to come out of pocket with any monies, for example, for the escrow on the insurance or the taxes. And if they made you sign something that said, we'll let the payments go, but you need to keep current on the taxes and insurance, and then you breach that obligation, it gives them a claim to be able to act a certain way.
Right.
I think their contract with FHA will supersede any stupid document they put together.
Sure.
And try to, force borrowers to sign.
Yeah,
but that will be the first step.
If they were putting that, if that happened, I'd be curious. But that was in the very early days, right, of CARES Act, and a lot of these directions that are coming down from FHA or from HUD Center. What am I thinking, Jim?
FHFA.
Yeah.
Those policy decisions have been developed over the past 15 months, right?
Mm-hmm.
And so, I agree with Paul and Jim that the communication with the lender, and we're talking to anybody out there who's in this spot, is you have to really get on the horn with them and just tell them what you want. right? And then see what they're going to offer back. And at the end of the day, if you're going to be one of those cases where they're just playing hardball for whatever reason, you got to, maybe it is you talk to Paul, or maybe it is you don't ever, start losing your equity position. But
right, that's the other big thing with people in today's market that's so different than years, 15 years ago when we started going through the crash, was that most people now, thank God, Terry and his family have 6 figures of equity in the house right now. Last cycle, he might have 6 figures of negative equity in the house.
Yeah.
Easy.
Well, and I think that's what the banks are looking at is, hey, you'll figure it out on your own because you have so much equity, and let's try to squeeze you to get a loan from your uncle or whatever it is, so that I can get my performing loans performing again.
So I'd like to, we're going to take a break right now, Johnny, for the 10 o'clock, so Jimothy doesn't kill us because we didn't have any break yet. But the other thing is I just want to say one thing. Terry, thank you for taking the courage to give us a call live on air. We're going to talk to you off air continuously to try to get you the help you need and the advice you need. We're going to make that happen, okay?
Just one other thing, Terry, just one other thing, and it's something that I wished I could have told people back in the 07, 08 days. Don't let the banks bully you and force you into signing something or sending them documents that allow them to take certain actions against you. There are so many people who thought the banks were their friends, and the bank would ask for documentation and they would just willingly give it. And what the bank was really trying to do is build a case for not treating these people the right way. So if you start getting into double talk and asking you to send, 90 pages of paperwork, let somebody look at it before you send it out.
Absolutely. And Paul always gives free consultations. If anybody else is missing mortgage payments right now, they're in the CARES Act. They're starting to get these letters. They don't know what they're going to do. You got to give us a call. We cut our teeth. We started this show 10 years ago, helping people that were in trouble with their mortgages. We can help you today. We're actually even better, stronger, more capable than we were 10 years ago. Maybe not Paul. Maybe Paul's been up there the whole time, but everybody else on the team has gotten better and stronger.
I thought you meant I've gone downhill.
Paul was at his peak in the middle of the crisis.
That's right.
He was in the snow caps. He was in the snow caps right then. No, I'm talking about that Paul keeps the standard high, and we have to reach Paul.
I've been going downhill since 2022. Yeah, 2012.
Come down here with me, Paul. It's better down here.
That's right.
But this was a great little segment. We're going to continue this right after the break. But this is a great segment because this was like an insider view of Paul interviewing and Mike and us asking questions to the homeowner to help them figure out how they're going to talk to the bank and to get the answers that they need. And I'm sure that there were things that we told Terry about. Terry didn't know to ask and didn't know the process.
Well, I would definitely, like I said, I look forward to doing business with you. I know we got the other thing to talk about down south, the other property there, and I feel confident, and I appreciate it.
That's great. So, Terry, off air, you might want to listen to the next segment. We're going to continue talking about the mortgage forbearance plan. Paul, what I want to do, the next segment is called Know Your Rights, and I want to go over some of the white paper stuff that Mike talked about, some of the policies that they want to see the banks follow when people are in trouble with their mortgage payments. We're going to go over that next.
Good.
Terry, have a great weekend. Thank you for being with us. I'll apologize that you have to talk to that Johnny C guy so much. I'll try to keep that limited as much as possible now. But have a great weekend. I know we'll be talking very soon, and I'm sure you'll be talking with Jim sooner than that. Thanks for being with us. 877-927-6969. You can dial it right now. If you got questions, comments, concerns, get in the queue. Jimothy will line you up, entertain you during this quick 4-minute break. You can also visit floridatalkrealestate.com. We're on Facebook. Thank you for being with us on Facebook. YouTube as well. It's Florida Talk Real Estate LLC. We're worldwide on the free download, the iHeartRadio app, and hitting pockets of South Florida on 101.7 and 92.1. Thanks for being with us. Remember, floridatalkrealestate.com is your access to the entire team. Guys like the law office of Paulie Krasker and his whole crew. You got Mike Rao, the mortgage guy from the mortgage firm. We got, of course, Ross Camaronets with Brightway Insurance, the whole Florida Talk Real Estate team, including Jimmy D's wonderful portion of this team. You got it all, y'all. One-stop real estate shop. It's FloridaTalkRealEstate.com. Count them up. 4 minutes from now, we're back at it. Hour number 2 of 2 hours of infotainment every Saturday. Great to have you with us. It's Florida Talk Real Estate right here on Real Radio.
iHeartRadio is the easy-to-use app for music and radio. Download the free iHeartRadio app today.
This report is streamed live on our iHeartRadio app. Download it now.
I'm CBS World meteorologist Jennifer Collins. Another hot and humid one for Saturday. Expecting a chance for a few morning showers along the coastline. Mostly sunny skies across the area, with temperatures back into the upper 80s near 90 degrees, and a chance for more afternoon showers and thunderstorms focused mainly in the inland and lake region.
This report is sponsored by Napa Auto Parts. Whether it's offering curbside or next-day delivery for online orders on over 160,000 parts or getting involved in their local communities, when it comes to serving you, Napa's motor never quits. That's Napa know-how.
This is Doug Gottlieb. Here's what's trending from the iHeart Sports Network.
Presented by Staples Stores.
Starting tonight, the NFL is set to induct 28 members into the Hall of Fame in Canton this weekend. It was a bad game for the pitching staff for the Marlins last night, and Miami hopes to not repeat the same performance. They head into Coors Field for Game 2. And a trade was made official yesterday as the Miami Heat will be bringing in Kyle Lowry from Toronto, with Goran Dragic part of the package going to Toronto. I'm Adam Crowley.
Staples Connect has amazing prices for everything on your back-to-school list. Right now, 2 pocket paper folders are just 15 cents. And comp books, 24-pack Crayola crayons, and 8-pack of Pep Rally No. 2 pencils are just 50 cents each. Ends 8/7 limit 30 pocket folder offer in-store only. Staples.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rao from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rao will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rao, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Camaronets, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to FloridaTalkRealEstate.com. That's FloridaTalkRealEstate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because FloridaTalkRealEstate.com has you covered. That's FloridaTalkRealEstate.com.
This is WCCR FM, West Palm Beach.
Hey, Jim.
92.1, powered by the law.
Jim?
The Manager and Levine
Do
accident.
you have a chance to look at that property?
Paul, I didn't get home until 9:30 last night. I
Oh, boy.
promise I'll do it this weekend. I'm
No worries.
This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Yeah, that's it. Toll free 877-927-6969. We got another hour for you. Well, 50 minutes to be exact. And if you got questions, comments, concerns in the world of real estate, don't hesitate. Pick up your phone. Jimothy will be very pleasant answering and lining you up. And of course, we got the team assembled to handle your questions and more. Your boy Johnny C, your air traffic control. We got Paul Krasker with us with Krasker Law. That's a beautiful thing. That's a .com, KraskerLaw.com, the law office of Paul A. Krasker. Hello, sir.
How are you?
Fantastic. Always great to have you with us. And Mike Rouse with us too, the mortgage guy from the mortgage firm. Michael, how are you, my friend?
Doing good. I got a funny Paul story just happened recently. I don't know if I should do it now or after.
Yeah, do now.
Yeah, do that. Oh, let me just say, now, those are the melodious tones of Jim DePolo with Keller Williams Reserve Palm Beach. He runs a top producing Keller Williams team. Jimmy D.
Hey, good morning, everybody.
It was
go ahead. Give us your story here.
I was out with an agent who I know, but I'm trying to kind of build an ongoing relationship with, and so we met out for a cocktail hour. And I was telling him about the show, and I'm the mortgage expert, and he looks at me, he's like, "Really? Wow, radio show?" I said, "Yeah, we're run on FM." He's like, "Whoa, what channel?" I said, "That's 92.1, real radio, Johnny C." And he's looking at me kind of like, and I was like, "And Jim's Jim DePola, and this is a KW guy," and he's like, "Jim DePola," and he's like, "That kind of rings a bell. Was he out of the Vista?" And I said, "Yeah, I forget what you guys are called now, but and I was like, and there, we got other experts, and I mentioned, Ross, and he's just kind of, his eyes are glazing over. And then I said, then Paul Krasker, he's kind of the legal, and he goes, "Paul Krasker? Oh, I know Paul Krasker." Like totally changed his mind about what I was talking about.
Legitimized everything. Huh?
That gave us the gravitas that I needed.
Terrific.
Paul, even though you're on your what is it, the down slope, you still got the panache.
I have no snow near me at all, and dripping on the top of my head. Yeah.
Oh my God. I think that our production crew is going to have fun with that snow cap thing for a little while. I think. I don't know. Hey, I want to continue with missed mortgage payments in the CARES Act. Okay, so we just had a really great caller right before the break. If you missed it, you got to go back and listen to it again. Terry had entered the CARES program, the CARES Act program, because he was financially hit hard during the COVID epidemic. Then what happened was he was able to miss his payments, but now his mortgage company is demanding all the payments be made upfront in full right now. They didn't say that they were going to accelerate the mortgage in the letter. It was just a bill saying you owe us 14 months mortgage payments plus the escrow. Okay. Now, we don't know what's going to happen in the future with this. Now, we've had a couple of months earlier, we had several people either through Paul, through Mike, or calling from the show saying that they had very good experiences about the missed mortgage payments, and the banks did what they promised to do. Or what were the banks, I shouldn't say promised, but what we were told during the CARES Act was that the payments would be put on the back end of the loan. There would be no late penalty for missing the payments. There would be no accrual of interest on the payments missed. It would not be reported to your credit bureau as missed payments. And that when the CARES Act ended, or when you were back on your feet, you would just start making your mortgage payments again as if nothing happened. The only difference is if you started out and you had 300 months left of your mortgage payment on your loan, and you missed 12 payments. Now you owe 312 payments, right? And that was what was supposed to happen. But I always am skeptical because of what we went through with the last cycle, that banks don't always do what we think they're going to do or what they tell us. So now we have the situation with Terry where they're asking for all the money up front. And he has a federally backed mortgage called FHA. And FHA did put out a white paper just recently of guidelines of how they want the lenders to deal with people that are behind on payments and how to get them back into the fold and be performing note holders again. So, or note borrowers again. So, Paul's advice right away, talk to the bank. Number one, don't ignore your bank, talk to them, right? So Paul gave some questions of what Terry should call the bank and tell the bank in no specific or no in most specific terms that, hey, I have an FHA mortgage. My belief was when I went under this program that my payment should be handled this way, and that's the way I expect them to be handled. And let's see what the bank says at that point, okay? The other thing that people have to worry about is that we have a lot of the people that are in trouble with their mortgages right now or behind on their payments have a ton of equity in their houses. And the lenders kind of know that they have equity in their houses. That's not a secret to the bank, right, Paul?
Nope.
Okay, so they have an idea. It's like, wow, this guy got $100,000 equity. This guy got $150,000 equity. This person has $70,000 equity, and they owe us $12,000. But the house is not upside down. I want my $12,000. Right? So this is what we were told, at least when you read all the papers and you start reading about everything. FHA is telling the lenders, please do not foreclose on anybody before the end of the year. So they're saying we don't want anybody kicked out of the house before the end of the year. And what they wanted to do is to try to work out a plan to get them back in good graces with the lender that is equitable to all sides. And so what that means at first, if they can't put the money on the back end of the loan. So for example, let's say you've run out of your COVID CARES Act assistance program, which is 12 to 15 months, depending on which kind of government-backed loan you have. And then you don't have your job. You still don't have your job. You're unemployed. How are you going to get back to making your mortgage payments, right? So the banks have to take that in consideration. They have to consideration about the escrow payments that were missed. All that has to be figured out. So what they're telling everybody is try to work it out with the homeowner as best you can. So Paul, that sounds to me like loan mod territory. Is that what's going to happen? Is that the banks are going to start having to see if they can do a loan modification on the loans that went into the CARES Act?
So let's talk about the specifics, but let's also stand back a minute and think what's different between 2007 and 8 and today. Okay. You started talking about some of that. Number one, the banks are in much better position for their financial strength than they were back then. Back then, they needed government handouts to even stay afloat. Today, they have the ability to turn back to the government and say, I don't need your help. Don't tell me what to do. You did mention a minute ago, the big difference from a borrower's perspective is many of them have a ton of equity in their house. And they didn't back then. So those lenders are looking at them and saying, you could have afforded to make your escrow payments. If we say that you had a 30% drop in income, but you also had a significant drop of expenses because you were inside your house for 15 months too, somewhere along the lines, you could have found the $3,000 to make the mortgage payment, to make the interest payment, escrow, the insurance payment or the real estate tax payment. And if they told you you had to do those and you didn't, it gives them that little hook to do what they want. And I thought it was interesting, and I don't know if others agree or not, that FHFA didn't come out and say the banks shall do this. They said, we expect or we prefer. So I don't think they have the hammer over these banks like they did in 2007, 2008. That's my personal opinion. I had thought that there was some backroom deal that was going to be cut where they gave these banks huge tax credits to throw everything on the back end, and so that the banks willingly threw it on the back end of the loan in exchange for, not having to pay taxes on a third of their revenue stream, whatever it is.
Recoup one way or another.
Right. And so you just don't know if that deal never happened or what when you start hearing these initial stories like Terry's.
Yeah, so the thing is that can you give some of the basic advice that we used to give back in the day when people were really in trouble and they had upside down houses about like how when you talk to the bank, when you talk to the customer service rep, I remember you used to coach us really well, the audience really well. It's like, make sure you take down the customer service rep's number, take down the time and date when you talk to the person, write notes down as to what they said, and make them put notes in the file of what you said and make them read it back to you so that you know it's in the file.
I want your name. I want your client reference number, whatever it is. I want, and I know you said at the beginning of this call that you're recording this call. I want you to know that I'm recording this call as well.
Mm-hmm.
Then all of a sudden, they don't say the things like some of them were saying when they didn't think they were being recorded, that said, it's okay to make a payment that might get the bank going in negotiations. And they then spoke honestly and directly to you without sugarcoating anything because they know it's of record and they know you're going to play it in court someday.
Yeah. It's really important you do that. Customer service number, time stamp on your notes, what time you had the conversation, who you talked to by customer service rep number, because they're usually not going to give you a real name. They'll give you a rep number.
And these are my notes from the call. And if you'd like to hear the call in its completion, I recorded it so that there's no misunderstanding of what was said. But here's my summary of what I was told, and I want you to honor that.
So what will happen to the people, Paul, that the people that, let's say, they went into the CARES Act, their economic situation hasn't improved at all. They really can't afford to make the mortgage payment that they currently or they used to have. And they are making something, though, let's say. They're not completely unemployed, okay? So that would be a time where you go to the bank, you see what they're going to do for you. Now, let's say they don't give you what you want or what you need and you can't financially make it. One of the pieces of advice you gave on the last segment, which we're going to pull out as a chunk video, is that don't feel like you have to sign something. Don't let the bank bully you into signing something you don't want to sign. My advice is if you don't get something that's going to work financially for you, you got to give us a call back so that Paul's team can look at what your real options are, because Paul's going to give you all your options, not just with the options the bank wants you to see. Yeah. And what would happen in that case, Paul? Would that just turn into a normal loan modification application?
Yeah, I mean, we've said for a long time now, it's not a question of what they're going to do with the back end money. They're going to look at people and say, hey, I'm not going to throw it on the back end of the loan if I know that next month you're not going to be able to make the payment. That's stupid. They're just wasting time doing a silly mod that doesn't help solve a problem. So there are a lot of people who, if they're one of the people who lost a substantial amount of their income pre-COVID and are coming out of this, that are going to be stuck and have to do a modification as the only way forward.
And sometimes if you're not making enough money or any money, there is no option for modification because you have to make a certain amount of money. So like if your mortgage payment is supposed to be $1,500 a month, and you go through the loan modification process, which is a mathematical formula, and you find out that the most money you can pay, including your escrow payments, is $800 a month. Well, the bank's never going to be able, that might be all just paying back the escrow with nothing to pay back the bank. And the bank's probably going to reject that loan mod for lack of minimum amount of money needed for the loan mod, right, Paul?
Correct. And that's where we have counseled people about having a family member move into the house and pay rent towards it so that you can get that number up a little bit. And hopefully it's a short-term issue anyway, because your income's going to go back up after the world goes forward post-COVID. Now, one of the struggles is everybody's looking at today with the Delta variant and saying, are we heading back into a lockdown? Are the hospitals filling up again? All these things let people have less security about their financial ability to move forward than we did 2 months ago.
Now, what do you think is going to happen, Paul, if somebody makes enough money to make their regular mortgage payment? No problem, right? Now that they've used up their benefits, but they can definitely make the current mortgage payment, maybe even pay back the escrow, maybe. Okay, in this fake scenario I'm making, okay? But the bank comes back to them and says, hey, you make plenty of money. I want my whole $15,000 right now.
Yep.
And then the owner says, well, yeah, I might be able to give you that 50. Well, they might not tell the bank this, but let's say that they could maybe afford to give them the 15,000 back in this fake example, but they really don't want to because it feels like it's going to make them super tight and they're worried about their future. So they tell the bank, no, I don't want to give you all the money up front. I want to put it on the back end of the loan like I was told when I got the CARES Act in the first place. What would happen in that case where they have the ability to pay, but they don't really want to because they want to kind of save their money?
Yeah, I'm not sure. That gets back to the big picture item that I was talking about before, is what hammer the FAHAF, whatever it is, the hammer they have over the banks or not. I mean, if the banks don't need it and are going to turn around and say, fine, I'll just do conventional loans without FHA and without Fannie Mae and Freddie Mac, good luck to you.
They're spending $40 billion a month on backing the mortgage securities right now. The Feds are, right? So the Feds are backing out those backing the banks up by making those mortgage-backed security payments for 18 months now.
And the economy is so reliant on the real estate industry right now.
Mm-hmm.
The retail industry is challenged. The office market is challenged. The warehouse market is great because of Amazon and wherever else.
Mm-hmm.
But you have all these markets that are challenged, and to have the government not step up and protect people who are really teetering would be a shock. But all we heard last week is about the infrastructure bill, and the back end of the infrastructure bill is raising taxes and potentially getting rid of 1031 exchanges and potentially jumping up the capital gains rate.
Mm-hmm.
Well, what's jumping up the capital gains rate going to do? It's going to crush the real estate industry.
Yep.
So I don't know. I don't know.
It's pretty crazy. So if you're in trouble with your mortgage and you're getting notes from your bank that you owe all the money up front, you got to give us a call, right? We're one phone call away. You don't have to lose any sleep. We know that happens. You don't have to freak out. When I met Terry, he was a bowl of jelly. I don't blame him. Jello, I guess I should say, not jelly. I don't blame him. Johnny's showing on the screen, 888-973-7828 is the phone call to make. But when I met with Terrence, he was very confused. He didn't know what his options were. We sat down. We went over everything. It would have been very easy for me as a realtor to tell him, hey, just sell your house. You're going to make six-figure profit in your pocket and go rebuild your life again. But when I looked at all the other factors, the mortgage payment he's paying right now is so sweet. It would be hard for me to tell him in his financial situation to go ahead and do that if he didn't have to. So now he knows what his options are. We're going to try to get him his full array of options and try to get it done. A lot of the people that are going to come to us are going to get some free advice, and that's all they need. Sometimes you're going to need to hire the law office of Paul A. Krasker to negotiate for you with the bank, and that's okay too. Anything that needs to happen, we can make it happen for you, Mike.
Yeah, I was going to say, Paul said something I think is really important, which is the banks are doing some sort of evaluation on whether or not they should even make an effort into trying to help you resolve your situation. And if you're not communicating with them, they're going to assume the worst. They're going to assume you're not going to be able to make that first payment when it comes due, or the first 3 payments, or, you know, so you have to. And I don't know, because I've seen all over the board as far as results. I saw on a VA loan where they did a modification in December, started them on a new 30-year term at 3.25%, right? So they just straight modified that VA loan. I've seen it where they've taken everything that's missed and they put it as a balloon on the end. So they didn't re-stretch out the new 12 months. They just made put a balloon at the end of their regular term. I've seen it where they've tried to incorporate the missed payments over 5 years, right? So it's non-standard, but under most circumstances, those banks, I think, are trying to get people into something that they can afford, but you have to communicate with them. I'm not saying, like, I think Paul was correct. Like, don't send them stuff. If they start analyzing your income for DTI and all that stuff, you may be entering some realm that you don't want to be in.
Don't start giving your financials to the bank unless you have an attorney reviewing it for you. That's
yeah. I was on the phone with a credit union the other day, and I'm talking to them based on information a client gave to me, and said, we need to move the arrearages on the back of the loan, and we need to restructure to a lower payment. And unlike the Scud Missile Mortgage Company that just gives mortgages, this guy's dealing with a credit union. And the guy said, "How stupid do you think we are?"
The banker said that?
Yeah, he said, "How stupid do you think we are?" And I didn't answer because I didn't want him to know how stupid I thought he was.
No, you keep that close to the vest.
But he said to me, "This guy's paychecks have gone in to his bank account at my credit union every month. I know he's making the same thing he was making before COVID, and he probably spent much less money. I know what his bank account balance is. He can well afford to pay this. Stop playing games with me." Oh,
hard, right? It's very difficult at that point. The other thing I want to just
are they allowed to do that, Paul? Can they look into the guy's bank account?
Yeah, of course. It's their records.
Yeah.
But I want to bring up something Mike said. And I just want to emphasize this because this is one of the things they came out with 2 weeks ago that we talked about on the show. I think Paul was on the show that week. The white paper I read, and I can't remember which group it was. I don't know if it was FHFA or if it was FHA or it was Freddie or Fannie. I can't remember. But, well, FHA would be FH. By the way, FHFA is Federal Housing Finance Administration. Okay.
And as far as I know, Jim, they are speaking for all of the Fannie Freddie securitized.
This is one of the little clauses that they had in there. Not when they started the CARES Act. This is today. Okay. They had a little clause in there that I read just recently that says if you don't communicate with your bank on a timely manner, they can kick you out of the program.
Sure.
So that what Mike had mentioned, what Paul mentioned, talking to the bank is crucial. Yeah. You can't ignore them. Don't stick. We just heard, who was the guy that called up today?
Terry?
Keith, right?
Terry?
He said he got a letter. It wasn't related to a lender, but he got a letter. He didn't want to open it because he thought it was going to be bad news, right? That happens with people missing mortgage payments all the time. They stick their head in the sand like an ostrich. Don't do that. You could be kicked out of the program. Don't do that.
Yeah. So, yeah, and I don't mean to imply with my conversation that the bank doesn't have a right to ask for financials. They have an absolute right to ask for financials. Mm-hmm. Like I was saying with the credit union example, if somebody hasn't lost any income and they just participated in the program so that they could bump up their savings, then when it comes time at the end of the day to pay the money, they have to pay the money. That's not unfair. So it's everybody's situation is going to be a little bit different. That's why you have to ask the questions and find out the truth before you go to the bank to know how to position it.
We're talking with Paul Krasker today, obviously valuable member of our team. We got Mike Rao, the mortgage guy from the mortgage firm, of course, Jim DePolo with Keller Williams Reserve Palm Beach. And Paul, really valuable to be part of our team in so many ways as we're getting into the ending of the forbearance and the CARES Act and a lot of uncertainty, how things are settling in. His team, his information, their guidance, their options can be very valuable. KraskerLaw.com or, of course, FloridaTalkRealEstate.com. Now, we're talking about the bank and knowing the financials, knowing if you have automatic deposit, your income hasn't come down. There's a really glaring example of people maybe trying to pull a wool over a bank's eyes, and they just can't because it's way transparent for them. Opinion-based question here, Paul. Do you think things like, let's say somebody had a great opportunity to do a cash out refi. Their equity positioning has been fantastic, as so many are. They do this big cash out refi. Everything goes good. Boom, into the CARES Act. Yeah. Is that a negative, do you think, in the bank's perspective that, hey, man, they stripped a bunch of equity out right here, right as we went into the CARES Act? Do you think that hinders some people about how the bank's going to treat them coming out?
So,
opinion-based, clearly.
Yeah, it shouldn't.
You're right.
I think the bank will want to know, did you really need the money? So they may ask a couple of financial questions. But I don't think it should. Will it? I don't know. And look, you've got all these lenders whose primary goal is to make loans. So if I'm a lender and I'm talking to Terry and I'm trying to force Terry into refinancing with me, I'm going to send him a letter that says, hey, you owe me $15,000. And then as one of my options, I'm going to say, but I'll refinance the whole thing because interest rates are low and I'll drop you down a half a point. All of a sudden they get another fee for having done a refinance as opposed to a modification where they're not getting a fee. And they double their income for this year. So I don't know if that's going on too.
I don't think that scenario is possible right now, simply because Fannie, Freddie, FHA, VA are setting the rules for when can somebody refinance coming out of forbearance. And so unless that Scud missile company was planning on keeping that loan on the books and not having a potentially, securitized loan, Fannie Freddie securitized loan, they wouldn't be able to do that. But I'm sure there are lenders out there that are planning on keeping loans like that on the books. I just don't think it's the big ones.
What would stop them from doing that now?
So most loans, you want them to, so the conforming loans means it's going to be a loan that can be sold to Fannie Freddie, right? Or can be sold and packaged as a mortgage-backed security, an A-rated one. And so Fannie and Freddie right now say you have to have 3 months performance coming out of forbearance.
Got it.
Right. So you basically have to make three payments per the terms of your coming out of forbearance agreement. FHA and VA are even stricter. They want 12 months. Now that could change, but they want a full year.
Yeah, and this is the way they can solve this for everybody to make it really, really easy, that we don't go through what we did last time. And I don't think it's going to be a massive crash like last time, guys, just to put it in perspective. I found out something interesting. Remember we said that there were as many as 6 people that were missing, 6 million homeowners were missing their mortgage payment at one point. Well, we got down to 1.75 million in the CARES Act. The report I read about a week ago, the most recent report I read, was down to 1.75 million. But what I didn't know is that there was another 1.5 million that missed their payments that are not in the CARES Act. So we're really talking about, 3 million people that are not making their payments right now and are at least 90 days late. That was the figure. So 3 million 90 days late or more.
So these are people that are just in default. They never bothered to call the bank and go, "Hey, I need to look into forbearance."
Yeah. So what I'd like to see is if they get smart this time, and they say to the lenders, "Hey, if the owner can prove that they have the ability to pay a new mortgage under a refi, and the refi can absorb all the missed payments and the escrow and all that, go ahead and let them do it. As long as you can show that they're fully employed and that they can afford the payment just like any time. And even though they might have missed the payment for 12 months, just go ahead and let them do it."
So,
right?
So a HARP 3.
Yeah, basically, I would like to see a HARP 3. And I think if that happened, it would take out probably 3/4 of the people that are in trouble. Now, I'm making up a statistic here, and I can't tell you it's 3/4, but I bet you the great majority of them would just go into that fold, right?
Why did HARP have such a bad rap? Because it seemed like it was such a benefit for people. Why was there such a negativity tied in for a lot of people?
Well, the only thing about HARP is people wanted the full principal reduction, and they just weren't getting it, and they were getting stuff put on the back end of the loan, or a balloon payment at the back end, or the payments went to 40 years long, and it took 15 years to get back right side up. Right, most of the people had to wait 10 years or longer to get right side up when they went in that program. So I
might be talking HAMP, right? HARP was just a straight.
I thought a home affordability refinance program. Isn't that
I
what
think that was a straight streamline refi.
Right.
But anyway,
Jim, you're right. HAMP was the one I was talking about, the loan modification. I apologize.
To your larger point, Jim, I think and Paul's too. Paul says the banks, the financial institutions are really healthy right now, and they're partially healthy because Fannie and Freddie have been supporting them through these missed payments, right? Basically helping them make the payments to the securities holders. But their worst nightmare is a default rate that goes where they were predicting, right, in that 25% zone or even higher. I mean, what was it before? 50%. Like that's their worst nightmare. That will really impact their financial position.
Yeah.
And I don't believe they're interested in the equity in these homes, right? They don't want to foreclose on these homes. They don't, their money is made when mortgages perform, right? When payments are made on time and the kind of the wheels move and the things are in motion like they're supposed to be. And I think ultimately that is driving the policy decisions and hopefully drives the majority of the cases, right? That they want you back on track, paying your mortgage on time. That's right. My personal feeling on it. I could be wrong, but
and they've got a lot of tools that can get you there. They can refinance you, whether it's a HARP 3 or just an internal program that's approved by FAF.
Yeah.
Finance Administration.
FHFA or an internal program, something like that, or they could do a modification with throwing things on the back end, or they could look at half of these people and say, I get why you applied for it, but you really didn't need it at the end of the day. And I just saw your 2020 tax return, which was pretty strong. I'm going to ask you to make half the payments now, and I'll let you catch up over a year, but that's all I'm going to do for you.
Yeah, and if they really didn't lose money because Fannie and Freddie were kind of supporting them, they don't have a problem with the balloon, right? I've seen the balloon a lot. They're like, you know what? Push it to the back. It's not like they're never going to collect that money, right? That home is going to be sold or refinanced in some period of term under most circumstances, not most, but whatever, sufficient circumstances.
Yeah.
So, let's
talk. Let's just switch gears here, just real quick about the student loan program. Okay, so there was news on that. CARES Act. I don't know if it's actually called the CARES. I don't know if it's a CARES Act program, but the Biden administration, the president came out, extends the student loan payment pause through January 31st, but they're saying that's it. So that means people could have stopped missing their payments as early as March 2020 without penalty, and it's going to end July 31st, 2022. But go ahead, Paul.
Unlike the mortgage situation where they do seem to care, this should be called the Don't Care Act, because they're hurting these people so badly.
Mm-hmm.
And I'll give you an example. If somebody had $100,000 in student loan debt and they signed up for the CARES Act,
Mm-hmm.
that interest still continues to accrue on their loan.
That's right.
So at a 6% interest, at the end of the year, you were at $106,000 that you now owe. And then for the other half a year that goes beyond that, it's now another $3,500 when you add the 106 and start doing the interest. So let's just say that you're at $109,500 at the end of your deferral period.
Mm-hmm.
If you went into the repayment programs
Mm-hmm.
and you had a zero payment because you couldn't afford to make the payment, they would have forgiven the interest and a portion of the principal, 1/20th of the principal,
Mm-hmm.
or maybe more if you were in a different class. But assuming it's a 20-year term, they would have deferred and then forgiven all that interest, the $9,500 plus 1/20th of the principal, which is $5,000. So instead of having $14,500 forgiven out of your student loan debt and be in the same position when you're ready to start up, you can start paying, but also be in the position that if you're not able to make payments, they'll give you a lower payment for the next year as well, and you'll get additional savings. But at the end of that first year, you're talking about the CARES Act having a balance of the student loans of $109,500, or in the other example, having a balance of, what is that, 14,000?
86,000.
85.5.
Yeah, 85.5.
Mm-hmm.
So
I you know what, as you're saying this, I'm dumbfounded, because what I've been hearing from so many people who have student loans is, and this is their understanding, it's the way they just made me believe, I'm in a moratorium, I have no interest right now, I'm good. And the reality is they're completely 100% wrong.
No, that program stinks. That's a crappy program. Excuse me. I'm sorry, but it is. And
Like
they
Paul
should
said,
have
they
just
don't care.
promoted. They should have just promoted the program that's been around for. I don't even know how long that program's been around, Paul. You know way better than me. We started talking about, I think, in 2014 or something, but it's been around since like 2009 or something, right?
I was joking with somebody and I said that the student loan policy is like government proctology. They just literally stuck their whole fist. Yep.
Yikes. I know.
Paul, the numbers are just so clear. You just don't understand why people.
Hey, I got a quick question, because you have helped, many people through the years get into that income-based repayment program. So can you talk to those people who are in that, who also have been in the, forbearance with the CARES Act as far as their timing? So how can these people make sure that they don't make a mistake, right, coming out of this period or starting January? So the people who are in the program already, they've got years under their belt, deferred payments, deferred interest, whatever it is. Can you talk to them real quick?
Sure. And we've been talking to them consistently throughout this time period, telling them, don't go into the moratorium. It's the worst mistake. It's a government trap. They're trying to screw you. And many of those, when their renewal came up, because it's all based on what you earn, the people who really had a legitimate reduction in their earning, we've got them back down at a zero payment for the next year. So they started with us when they got out of college and didn't have a payment. And then they started earning money. So instead of making the $1,000 payment that they should have been making, they were making a $200 payment. And then the third year, it went up to a $300 payment. And the fourth year, it went up to a $350 payment. And they're still way ahead of the game because they're saving all that difference. But then this year, they went back down to a zero.
That's correct.
It's been another year of zero, and now they're literally 25% done with their program after 5 years on a 20-year plan, and they're back to a zero payment, and they might go back up to 150 next year and 200 next year. So for the first 10 years of this program, they may end up paying a third of what they were supposed to pay. And that's all. And the 2/3 is given at the end of the day.
But it counts as if they were paying that $1,000 a month the whole time, even though they weren't. Now, my two favorite cases of this, my two favorite case studies of this, Amy. Amy came to us after making her payment for many, many years. She was married and was a homemaker at the time, right? She was saying a homemaker doesn't even do justice because she was a foster parent and she had a whole bunch of kids running around. It was like full-time care for her. It was, they're awesome, awesome family. But that's what, that's the lifestyle they chose. And she was working full-time, raising the family. So we got her over to Paul Krasker because they heard, the husband heard about the program. Amy found out that she was supposed to be paying, I think, it was either between $500 and $800 a month. I can't remember. She paid $0. The next year she paid $0. The next year she paid $0, right? So what that means is she's on a 20-year payment program under the guideline that Paul put her under, the ability to pay program. Since she isn't making any income, her ability to pay is $0. So each year she's been paying $0, but each year that $0 payment counted towards the 20 years that she had to pay back the loan.
Yeah.
With no increase in interest or anything. So Amy's been doing great. Now, if Amy goes out and gets a job next year, right, if she decides that she wants to go into employment,
right,
she's going to she will make a payment, not $0, but it's going to be based on the amount of money she's making, not the monthly mortgage payment that was set by the student loan company. Okay.
Right.
Now the others case. So that's a great success story. Now here's the other case study. We had a guy that came to us, very big fan of the show, got the student loan program for their wife. Their wife had about $800 a month in debt. It was very expensive. Okay. They got it down to like 200 and some. Paul through, going through the program with Paul, it was down to 200 something a month. They were loving it. Didn't really hear, even though I'm buddies with the guy, I didn't hear from him about the student loan program for probably 2 to 3 years after they entered the program. Then I get the call. Hey, Jim, my student loan payment went up to $1,400 a month. What's going on? So my first thing is I sent a text back to him and I said, well, what does Paul have to say about it? Because Paul fills out the application every year to make sure that they stay current. And he goes, I didn't have Paul do it this year. So for 3 years in a row, they had Paul do it, right? And then the fourth year, they didn't have Paul do it. And they went from like $200 and some a month to $1,400 a month when they were originally paying $800 a month when they first came to Paul, right? So I said to him, why do you think that happened? And he goes, I'm not sure. And I said, I think they took both our incomes as a joint income and used that as our ability to pay. Sure. And then Paul went in there and he looked at the way that it was supposed to be presented to the loan company or the program in the right way and got it back down. Within 3 weeks, I got a call from the guy that Paul got it back down to the same payment that they were originally paying for the 3 years, right? Now, why did that all go through like that? Because every year, the catch to this program is every year you have to show them how much money you're making. So like if you're making nothing, you're going to pay nothing on the loan. But if you hit the lottery next year and you win $20 million, okay, they're not going to give you a discount on your student loan because you have tons of money. But let's say that the next year you took all the money you won in the lottery and you blew it. You blew it all on black and it turned red. Okay.
Whoops.
And now you have no money again, then you'd be paying $0 again. It's based on your ability to pay at that moment, right? Or at that moment when you're doing the application. That program is the best stinking student government program that's been out there. It's been out there for so long. That's why we promote it so heavily. I shouldn't say so badly, so heavily. And if you're not picking up the phone to call us and you got an $800 a month payment, I'm telling you right now, probably 7 out of 10 people that call us with these big payments, they're paying either nothing or close to nothing compared to what they're supposed to pay because of the ability to pay program. Once in a while, we'll get a couple. I remember there was a couple last year. They called us. The husband was an attorney. The wife was a physician. There was just no way, right? There was just no way they were making too much money. But, at least they knew they knew what they knew. And you can't help everybody, but most people, the ability to pay is way cheaper than what they're offering you.
And that's a free consultation from us. So if there's a husband and wife out there who want to run through the system, we still do it for them and tell them, yeah, you're not going to save a nickel.
Right. And by giving the information over the phone, we used to joke it was 10 questions, 10 minutes, find out what your result's going to be. Yeah. They check to make sure it's a government-backed student loan. The other thing they do is you have to give them the information accurately.
That's right.
Of your income the way that Paul needs it. They take that, they plug it into a mathematical formula. It tells you to the penny what you're supposed to be paying. And as long as the information you gave Paul correctly, if you gave Paul the correct information, that's the payment and it's guaranteed. Okay, it's guaranteed.
Is it guaranteed?
Guaranteed.
And you don't pull out and cut a check to Paul for the work he's done until they've already done that work up front. So you know what you're buying when you're coming in. It isn't a question. It's like, I hope I get this program. You got the program, right? It's just about filling out the application, getting it done. Let Paul do that for you. And then what Paul does, and I think this is the brilliant thing, and this is the part where the second case study fell apart. Paul offers that he will remind you every year when it's time to reapply for this loan. He will remind you by email, his team, hey, it's time to do it again. Please give me your financial information so I can get you back into the, keep you in the program, right? And it's a very nominal fee. I think it's a few $100s, a couple $100, right, Paul?
Yeah, it was $299. I don't know what it is today.
Yeah.
We've lost maybe 3% of the people that we've helped with the student loans over the years who say, oh, I could do it myself. That's too much for just filing a couple pieces of paper. It's not the filing the pieces of paper. It's knowing how to interpret it from the student loans servicing department's mindset and knowing which papers to file.
But which one's not to file.
Right. And a lot of people have said, oh, I could do that myself. I'm not going to waste $300 or $250, whatever it is.
That's what that couple did. And they went from $200 a month to $1,400 a month that 1 year. 3 years with Paul at $200 and change a month. And then they do it by themselves 1 year, and then it's $1,400 a month.
And I wanted to get mean-spirited when people did that and they left, and then we had to go back and get them into the program. I wanted to charge double.
You should have.
Yeah.
And the student loan girls said, no, I'm not going to do it.
Well, I mean, maybe not double, but you should definitely penalize
right.
them.
I totally get that feeling, that frustration, because it drives me crazy. I chase the student loan people like crazy.
Yeah.
Why don't you take free money? Why don't you just use the free money that's available to you right now?
I don't laziness more than anything. I don't know. I think that's the leader. I think it's
well,
laziness.
That's the young people who are graduating college. When we turn back to them and say, you don't have a job, you are required to start making payments within 6 months. You need to file for this, period. And they all said the same thing. Oh, we got the forbearance. We got the deferral from the COVID.
Yeah. They're paying zero. No pressure.
And the thing is, their interest rate is racking up. Their interest rate is just accruing. Click, tick, 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 tick.
That's what I said. Talk to me after you just spent another $9,500 on your student loan.
Right. Man. Versus paying hundreds to make sure you get the program that you're supposed to get. Now, the other thing I just want to leave off on this student loan stuff. I'm sorry, Johnny. Oh, I didn't know how we were. Just real quick on the student loan. Do not just call the student loan people. If Paul says he can get you $238.16 a month when you're supposed to be paying $500, and he says $238.16, don't call up your lender and then the lender goes, oh, we'll give you a payment for $238.16 too. Don't worry about it, because you don't get all the benefits of the government program. You don't get the 20-year cutoff. No matter how much you pay in 20 years, that's what you're going to pay.
We had 2 people last month who did what you said. They took our free consultation. We told them what they should get. They went to the government directly, didn't pay us the fee. And I know with great confidence that they are not in a forgiveness program. They just got their interest rate reduced.
And they feel like they won.
and they'll turn back to me 3 years from now and say, I thought you said, I said, I wish you'd hired me. You did it yourself and you lost 3 years. Do you want me to do it now?
Yep, let's go ahead and do it now. That's right. This can change your world. It can change your monthly outcome. It can change your ability to qualify for a home loan. It really can change your life. FloridaTalkRealEstate.com. Reach out. It's a one-stop real estate shop. We can get you connected with the law office of Paulie Krasker. KraskerLaw.com. We'll get you there easily. Of course, get you to Mike Rao. Have you with wonderful buyers and listing agents with our Keller Williams Reserve Palm Beach team. And, of course, every other aspect. Check your property insurance. You name it. We got you covered. FloridaTalkRealEstate.com. Mike Rao, have a great weekend.
You too, Johnny. Thank you. Thank you, guys.
Paul Krasker, please do the same.
Enjoy.
And Jim DePola, try not to work too hard. You got to have at least one day off every week,
I'm
okay?
not this day. I'm working today and tomorrow. I'm done. It's a 7-day week, so that's just
right.
what it is. Hey, can't complain. Rather be busy than not busy.
Slamming for you guys out there every single day. Work with the best of the best. It's FloridaTalkRealEstate.com. Stick around. You got Greek and Joe and Jimothy. The locker room is next. We're back at it next Saturday, 9 a.m., 2 hours of infotainment. Florida Talk Real Estate right here on Real Radio.